What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified whenever we release new videos. We release videos every night throughout the week and once on the weekend, but we also release bonus content from time to time, so having that notification button hit will get you alerted to whenever we release that bonus content. Make sure you follow us on X at Bullish Chips. That way you get updates about our real-time entries and exits on not only scalps and day trades, but mid and long-term trades as well. We also provide further commentary throughout the day, like updates about the state of the QQQ internals, our updated thoughts about the price action for SOXL, and just any other information we think might help traders throughout the day. Just a reminder, we're not financial advisors. We do not offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we think price action will take us in the future based off of our charting method and our trading method. Just a reminder, our trading method is based in the STRAT. If you're not familiar with the STRAT, there is a link to this free PDF in our description to this video. The STRAT is a very simple methodology to pick up. I encourage you to stay with us through this video. By the end of this video, you'll have a very good handle of what the STRAT is and how to use it. It's basically just a method for getting very precise entries and exits on trades, utilizing basically 6 reversal patterns and the fact that a candle can only do one of 3 things, be a 1, a 2, or a 3. A 1 is an inside candle, a 2 is a candle that price action either goes above the price action of the previous candle or below the price action of the previous candle, or a 3, which is what a lot of people will call an engulfing candle, where price action goes both below and above the price action of the previous candle. It also utilizes broadening formations, which is just basically drawing a line from a high to a higher high and a low to a lower low, giving you a better visual of where price action has been and where there's a high percentage chance of price action going in the future. So again, stay with us through this video, and by the end of it, you'll have a good handle of the strat and probably want to look more into it yourself. That's why we provided that free PDF. We've also provided a link to Rob Smith's YouTube page. Rob Smith is the inventor of the strat. There's plenty of information about him on the internet, so make sure you do your research about him as well, but he has a wealth of videos on his YouTube channel. Rest in peace, Rob Smith is no longer with us, so he's not creating any new videos, but there are a wealth of videos on his channel. If you're not familiar with our trading method and our charting method, then I also encourage you to check out our bonus content, specifically the video for precision trading. It'll give you a deep dive into why we use the different colors that we use for the different broadening formations that we have. Just makes it easier to read a chart very quickly. But again, stay with us through this video, and you'll probably have a good grasp of it by the end of it. So without further delay, let's go ahead and get into price action. In today's video, what we'll do is we will go over a quick recap of Friday's price action. Then we'll go ahead and take a wide view of SOXL's price action from a week, a month, and a quarter perspective, and in the year perspective. It's always important to make sure that you zoom out, don't get locked in on just a small time frame, and make sure that we understand where price action has not only taken us in the past, but where we are right now, and again, where we believe it will take us in the future based off of our trading method and our charting method. We will talk about the market maker's expected move for this coming week, and then at the end we'll set our triggers and targets for the coming week, and then also for Monday specifically. That way we're prepared for the week, and you can just enjoy the rest of your weekend. You'll be ready for a trading Monday. That way we can just get to collecting profit, right? So first things first, we'll look at the day chart so that we can just kind of recap Friday's action. So we did have the 2 down that we talked about looking for in Thursday's video. Again, one of our favorite trading patterns in the strat is a 3, 2 down, 2 up. Gives you a very precise entry, the high of the 2 up, and a very precise exit, the high of the 3. Normally, there's more magnitude to the move than what we had here or that what we'll have here on Monday if it does trigger the 3-2 down, 2 up. Simply based off the fact that we did open midway through this three. A lot of times you like to get an open that's either at the bottom of the three or even a gap down that pushes down, and then by the end of the day pushes back up and is inside the three, creating this what we call a failed three down, or I'm sorry, failed two down. So we got the two down. It wasn't very failed, right? It was kind of in force. It did push up a little bit at the end of the day, but what it shows is this year flip is still acting as resistance. And we talked about on Wednesday and Thursday to watch out for what is called a look above and fail. So we have this very defined range that we've been in for the past 6 weeks since the beginning of June, or middle of June. I'm sorry, June 13th when we had this gap up. And the range has been basically 24 to 28. Before it was 24 to 28. 2 Fridays ago, we did poke down outside the low of this range for what's called a look below and fail. So we've had the look below and fail. We've had the look above and fail now. So we're continuing to stay within this range. What it is doing is creating a broadening formation again. So we have a high to a higher high and a low to a lower low, which creates a broadening formation. And it just shows that the range is expanding, right? So we still haven't chosen the direction, but the range that we're trading in is expanding. So we've got a little bit more room to play with when it comes to buying calls at the bottom of the range and buying puts at the top of the range, right? Like a little bit more distance to travel now. But it's just putting us back into the trading method or the trading pattern that we've gone through over the past 6 weeks, which has treated us very well, which is buying puts at the top of the range and buying calls at the bottom of the range. So we do remain time frame conflicted. If you take a look at the upper left hand part of this chart, we have a time frame indicators. So we have the day, the week, the month, the quarter, and the year. We did have on Thursday and Friday full time frame continuity to the upside. So all four were green as far as the big time frames: the week, the month, the quarter, and the year. Those were all green. The day was as well, but in order for the week to flip green and all of those to be green, the day generally has to be green as well. So in this case, you can see once the day flipped red, that brought us back below the year flip, which we now have conflicting continuity, right? So, or we don't have continuity. So we just want to keep that in mind. That again tells us we're probably going to be in a range. It does look like we are defeating this monthly downtrend line still, but we've got to see what price action brings us this week. If we get a greater pullback and we're going to continue to make this broadening formation, possibly filling this gap and this gap as well, we don't want to, don't want to get ahead of ourselves. We could be entering greater pullback because we're getting closer to that September, October dates where we have very low performance for tech, right? Tech's worst performing months are September, October. August in the past before 2020 was the start of that. But, as you can see, we've had a pretty strong August so far, coming from the lows here at the end of July and getting up, breaking above the range, flipping full time frame continuity to the upside, even only for a couple of days. So we've got this range that we're going to continue to be in. Let's go ahead and look at things from the week perspective. Let's go ahead and get these daily broadening formations off of here. So we did get the higher low set on the week as well as a higher high. So the uptrend is still intact, right? So we have the low down here in April. We have the higher low here, and a higher low here, right? Since this candle has gone 2 up past the high of this 2 down, that's locked this 2 down in as a higher low, and we've gone higher than this high, so we have a higher high. So the uptrend is still intact. It's flattening out though, right? So this higher low, what's this? This is 15. This is what, 7, 8, $7, 15 and 7. So that's like $7 difference. We've got from 15 to 19. That's a $4 difference. So it's flattening out a little bit. But then from this 20 to 22, that's only $2. So this uptrend is flattening out, right? So it's looking more like a trending market, or at least from SOXL's perspective, which shouldn't be too much of a surprise if we look at above this. If we look at these as like two trading zones. The rule is generally when you trade one, oops, did we not get the box? Yeah, let's go. Generally, when you trade in one zone, you get, once you get to the top of the zone, if you get out of it, the next target is doubling of that zone. So you can see that would be about here, right? And you can see how there's this range of trading here and this range of trading here, So this is heavy overhead supply, right? And it's going to be a fight to get up into it. So it might take some sideways action to pop up into it, just like it took sideways action to break down through it, right? Now, if we take in another perspective, which we talk about a lot of times, and bring out the Fibonacci's from the 2021, oh, come on, Thinkorswim, 2021 run up, right? So if we zoom out and we look at things from 2020, we all know what happened in 2020, and since then we've been in a trading that same range, right? Bottom of 2020 to the high of 2021, all-time high, really the first week of 2022. If we have Fibonacci's drawn there, we can see the 61.8 is 3055, and that's just about the range, just about the area that we're into, right? So this 3055 is the 61.8 fib. Again, for people who are familiar with this channel, this is nothing new. We've talked about this many times before, but that's going to be a hard level to get through. The 61.8, the 50, and the 38.2, those are usually your strongest Fibonacci's, right? Other than the extreme high and the extreme low, right? But 38.2, 50, and 61.8, those are your strongest Fibonacci's. They're the hardest usually to push through, or from the bottom or from the top, doesn't matter which way. But we are running into that, so we don't want to forget about that. That's why 3055 was one of our extended targets on the day and 4-hour chart on Thursday. So let's get back into, here we are. So again, we have the higher low, higher high. It's intact, but we did get this pullback, right? That does set us up for a 1-2 up, 2 down reversal. Again, that's one of the main STRAT reversals when talking about the STRAT trading methodology. Again, another one of my favorite patterns: 3-2 up, 2 down, 3-2 down, 2 up are my favorite, and 1-2 up, 2 down, 1-2 down, 2 up are my second favorite, right? Gives you a very clear defined entry and generally a pretty big magnitude. Your entry is the low of this 2, right? And the magnitude for a 1-2 up, 2 down is actually the low of the candle to the left of the 2. So a lot of times you can have a 2 that has, the candle to the left of the 1 has a low down here. In this case, the low of the 1 and the 2 are basically the same, so it's not that big of a difference. But a lot of times you can have a magnitude that's down here on a 1-2 up, 2 down. But we have very clear entry, very clear exit, but that exit is also the top of a gap on the day chart. So if we don't bounce off the top of the gap like we did here, we could go ahead and fill the gap. If we fill the gap, we do threaten making a lower low on the week time frame, right? We would already have made a lower low here if we get past it here, but it would be after a higher high. So it would have the chance of just turning around here and going back up, creating just a broadening formation here. Oops, let's get the good. Creating a broadening formation here on the week, right? Like if that's locked in as the high because it goes 2 down, and again, we would go purple because this is the week. Our weekly broadening formations are in purple. So if we did get if the candle did come down and stop here, we would have a broadening formation from like here to here, right? And this is just looking into the future of possibility. We're not predicting this is what's going to happen. But if this did happen, if we got a 2 down that then reversed and came back up the following week, back up into the range, then we would have a broadening formation from the week perspective. And again, it could come back down, and because the broadening formation goes lower, it could still create this lower low. But at least for the time being, we would know that we were within this broadening formation, and there would be a good chance that we would be going back to the top just to continue broadening this out, moving sideways underneath this overhead supply here until we're able to finally either break out of it or break down, right? We do have more gaps to the downside from this move up, so we can't say totally take the downside off the table. We do have this, broad uptrend from a week perspective where we had a low, and then a lower low here. I'm sorry, a higher low here, which gives us a slight uptrend. It's nothing to really hang our hat on. Again, we don't put a lot of weight into these diagonal lines. We like our horizontal lines better, but we do have to still bring them into account and onto the chart to give us more information about the price action. So for right now, again, if we would go 1, 2 up, 2 down on the week, that would also bring us back below this monthly downtrend line, indicating that we still had not broken free of it, and it would put us in full time frame continuity to the downside because we would be red on the month. You can see these lines we have here are the flips for the year, the week, the quarter, the month. This one we could remove because the week is over, but if we're getting price action down here, we are red on the quarter and we're red on the month then by that time as well. So we have full time frame continuity to the downside. Continuity is kind of like momentum, so it could give us more weight to push down further and possibly even see this gap or just any more area down here, possibly poking below this downtrend line just to get back above it or something like that. But let's zoom out a little bit more, look at it from the month. I don't want to drag this video out too long. I want to let you enjoy your weekend, but it is important that we look at these things. So if we look at it from the month perspective, we do have for now a soft higher low, right? We went 2 up, we went 2 down to start the month, but price action did go back above the high of last month's price action, right? So we are, starting an uptrend, right? We've got our first higher low. Again, it is a soft higher low for the time being. We need another candle, next month candle to go 2 up to really lock that in. But that does put us in this 3 combo 2 down, combo 2 up strat. It keeps it in force. So it would target the high of this 3. Now, again, that's from the month perspective, and we're not saying that's going to happen this month. You can see it took a couple of months to go down, and we've taken a couple of months to come up. But from a month perspective, we do expect to see price back up to the top of this candle, which is 36.15. So we would have to break through, these were imaginary broadening formations we drew. Let's take that off. We would have to break through this broadening formation, but that would put us up around this weekly broadening formation, topping out up here. Could give us a higher high. We've got a gap that could act as a slight magnet as well. So from a month perspective, things are still looking good. Let's look at it from the quarter. And from the quarter perspective, we're in a 2 down, 2 up. All right, 2 down, 2 up. The magnitude of the trigger of the 2 up being the high of this 2 down, the magnitude being the high of the candle to the left of the 2 down. So the high of this candle is 36.15. So from a quarter perspective, the target is 36.15, which plays into the month strat as well. Now, if we do hit 36.15 and we clear that does put us in a 1 combo 2 down, 2 up strat from the quarter perspective. And we know that the 1, 2 down, 2 up, just like I was talking about with the 1, 2 up, 2 down on the week, that the trigger is the high of the 2, or in this case, in the previous case in the week, it was the low of the 2, but in this case, it would be the high of this 2, and the magnitude would be the high of the candle to the left of the 1. That's this big 3. That puts us back at 70, right? Yeah, 70.08. So, of course, I would be filling this gap, filling this gap, filling this gap. Again, this is a quarterly chart. I'm not saying it's going to happen this quarter. I'm not saying it's going to happen next quarter either. But from a quarter perspective, that's the strat that we're in. This 2 down, 2 up. looking for it to trigger this 1 2 down 2 up, which would take us back to the 70s and almost all-time highs. But that's what we're in from the quarter perspective. Now, the one thing that is different here, when we look at let's look at the year. Let's get zoomed in here. The year did trigger a 1 2 up 2 down. Okay, and just like on the quarter, we were talking about a 1 2 down 2 up. Here it's just reversed. So the entry is the 2 down, the low of this 2 up, right? So we got the 2 down. So from a year perspective, if you bought puts, once price action got below this, you were that's what the strat was. That's what it tells you to do. And the magnitude would be the low of the candle to the left of the 1. So that's this low, which is 621. Now we almost made it previously. We got to 7 something, but that strat has triggered, and that's what's keeping us from really breaking above this this year flip, right? Is it's hard to flip out of a strat reversal, especially one as big as a 1 2 up 2 down. Now we poked above it, we've got above it a couple of times, we just got to kind of clear it. And if we can clear it and make this especially green, close the year green, it doesn't matter, we don't need to get way back up here. As long as we can close green, that's what's considered a failed 2 down, and we would have a 2 down 2 up if we could trigger 2 up next year, with the trigger being the high of this year wherever it's at, and the magnitude being the high of 2024, which is that 70.08. So even though it is, we did trigger the 1 2 up 2 down, it looks like it's fighting back. So from a year perspective, it's not all doom and gloom, but the quarter is definitely bullish. The month is definitely bullish. The week, we got to see where it goes next week. It was bullish, but it did run this strat of the 3 2 down combo 2 up. The magnitude was the high of this 3. It did complete that and did go above. So we can't really expect more at this point. We just have to see where price action is going to take us here in the future. So if we bring back to the day and just bring up the daily broadening formations, we can see that, oops, this one is a little, that one 3 up. So we can see that we did have a new daily broadening line that did get put in here, but it's what it's doing is widening that broadening formation back out, right? Remember when it first started, we had this low to lower low and this high to higher high, so a decently wide broadening formation. We had this weekly broadening formation as well, so giving more credence to this high side broadening. But then the next higher high was not as high, or it didn't create a bigger broadening formation. It actually tightened it. Same with this lower low that we had, so it really tightened the range that we were in, which gave us further confidence to buy calls at the bottom and puts at the top. But it looks like now we're starting to broaden this formation back out with this higher high and lower low here. So we got to just watch out that we don't get these two filled, right? We had a pretty solid red day to the downside. And if you look at our X account, we did buy some puts at the end of the day to swing over the weekend. They expire the first week of September. Just some at the money puts. We didn't go in the money, just at the money right now. That way, if we do get a drop on Monday, we're ready for it. So now that we've gone through all of those, let's take a look at the market maker's expected move. To do that, let's bring out this, and we want to look at the options chain for this week. And if we look at the options chain, we can see for the August 22nd expiration, there is a market maker's expected move, 82.7% chance that price action will be either plus or minus $2.37. So we look at our close price, which is $27.37, and let's go ahead and pull up our notes. So these notes are for Monday, August 18th. Today is August 16th. And we'll have 92 trading days left in the year on Monday, August 18th. Let's go back over here. Again, our close price was $27.37. $27.37. The week will be the week of August 22nd. We don't know what the week is going to be yet because it hasn't opened, but we do know that the month is green. It flips red at 27 or 23.57, which again we have marked out on our charts here. All right. Let's get rid of the week. So the month is 23.57, flips red. The quarter is 24.38. We have that here. And we have the year flipping green at 28.13, which we have here. So in our notes, we can just look at these quickly and see, according to price, whether price action is, whether the month is red or green or quarter, whatnot. So this is for the week of the 18th through the 22nd. And our expected move, again, is $2.37. All right, so let's bring out the trusted calculator. That way we don't make any mistakes. And we have 27.37 plus $2.37, which gives us 29.74 as the high of the market maker's expected move. Now again, this is just the market maker's expected move. Price action can always go above it or below it. We had that in this past week's price action. So let's look at the bottom. 27.37 minus $2.37 gives us 25 flat. Oops, I guess we didn't need a calculator for that. That's pretty easy. But you can see we have an expected range for the week by the market makers of 29.94 and 25 flat. So let's go over to our charts and let's get into our chart with our 4-hour markers, and we can see that we want to edit the expected move top, right? That's the name of this line that we have. And we know that it's at 29, let me just verify, 29.94. Oops. All right, so we go ahead and put that in, and we can, that way we just have on the chart, so we have a quick reference. The expected move for the week is up around here, right? Now again, we went above the expected move last week. I guess I should have shown that on my chart. Should have another chart on here. Yeah, so we can see on this chart, the expected move high was here, and price action took us above it. Now it came back in it down within the expected move high. So I guess that is evidence that is pretty, pretty on point. There's usually around an 80% chance. But it did go above it. So it doesn't mean that this is just a ceiling and price will not go above it. It can go above it. It can close above it. It can go above it. It can close back below it. But it's just a level that is good to have on your chart, because that way you don't get too far ahead of your skis, as they would say. Especially, we buy at the money and in the money calls and puts. I'm not telling anyone how to trade, but just for those who don't buy at the money and in the money, and you buy a little bit further out, this can kind of help you reel in a little bit, how far out you may buy, right? So it's just something to keep in mind, keep on the charts. So let's edit the bottom of the expected move, and that was 25 flat. So the price range should be, anywhere in between these two here, right? Take this week off of there, and we'll take the expected move for Friday off of here. That way we can clean up the charts a little bit. All right, so we can see where everything is at. Expected move for the top of the week here, expected move for the bottom of the week here. We've got a gap down here slightly below it, so if we were to fill the gap again, that would break through the expected move, which again is perfectly fine. Let's go ahead and bring out our 4-hour chart so we can put out our 4-hour markers. So we want to take the low of day, previous low of day, move it to Friday's low of day. We want to take the 4-hour trigger to the downside and move it to the low of the second 4-hour candle of Friday. Make this bigger so everyone can see it. But you can see we've moved it to the low of the second 4-hour candle here. Then that'll be evident as to why here when we make our notes. All right, but we activate the trigger to the upside on the 4-hour. Oops, to the high of the second 4-hour candle of the day on Friday, and we'll take the previous high of day and move it to yesterday's high of day. And actually, yeah, no, we're good with those. So we do see we have here an hourly broadening formation, and I left this on here. This was from Friday. I probably should have showed it before. Yeah, let's actually do that. Let's move all of our 4-hour markers back. That way we can just kind of look at Friday's price action in a little bit of detail. Come on, how many moves did I do? All right, so if we just kind of break it down, let's go to the 5-minute and look at Friday. All right, we can see we had price action open here, which triggered the 4-hour to the downside, right? The 4-hour trigger to the downside. If we look at our notes, these are still from Friday. We can see that the trigger is 28.67. So we know if price action went below 28.67, we wanted to get in puts, and the magnitude was 27.95. So that's where our first target would be. That 27.95 would then trigger the day to the downside, which would then have targets of 27.70, 27.39, 27 flat, and an extreme target of 25.68. So we can see we broke to the downside, and our first target was 27.95. We can see 27.95 was previous low a day, and that's where we got our first sideways price action, right? There was what we call corrective activity in the strat world. So we got corrective activity here. So you could have exited here if you bought right at open as soon as price action went below, triggering the 4-hour trigger, which was a 2 up, 2 down. And you could have made your money from here to here, right, and exited, which is pretty good. 28.67 to 27.95. That's a little over, like 50 cents, right? Just general rounding, right? So that's pretty good with SOXL, especially if you've got multiple contracts. You know, you've got high delta if you're at the money, or not even have to be at the money, because that's one of the advantages of trading SOXL. But you've got a high delta, and you get in, get out if you want. Or you could get out of half of them and stay in for the extended target, or first extended target being 27.70. So 27.70 is about here, right? And you can see it's right there, right? So we broke through that. Our next target was 27.39. 27.39 is about here, and look where we bounced, 27.39. So you could have put your stop here at the second target point once we cleared it, and with that bounce, you could have got stopped out there, which is fine because we had a bigger retrace. And then once you've got stopped out here, you could, reassess the charts, and you could see, go up here, look at the 15-minute and see, okay, even on the 5-minute, it's a lower high. On the 15, what are we looking at? That's a lower high as well. So we're looking at lower highs underneath opening print, which again, our general rule, puts with lower highs underneath opening print. We'll just put opening print out here just so you can see it because we removed it. Right, there's the opening print. So lower highs underneath opening print, buy puts, right? So not only was it underneath the opening print, it was underneath the overnight low, it was underneath the year flip, and over previous low a day. So that's some pretty good resistance we got above. Good entry to go puts. But I remember I left this hourly broadening formation out here. This was drawn off of these two candles in the previous day, right? If you watch our videos, you'd know, because we have them marked out the day before. But we left this one on instead of moving it up, but just to show that it took us right to this, not only this lower target that we had, which was based off of a horizontal level, but when a horizontal level lines up with a broadening formation, that's a pretty good sign that that's going to be a bounce point, or at least a point of what we saw on Friday of sideways action till it resolves this area. Is it going to go lower or higher? So again, with the lower high here on the 5 and 15, you get your put. It goes back down to that 26.39 area. You could have exited again for another short little bit of profit, or you could have stayed in because it's just continuing to make lower highs and just finally gets to this lowest 27.20, which I don't think we had that on. We had 27 flat, so just kind of went down. But that just shows you how the 4-hour markers come into play, how you use opening print. First, if once you're in underneath opening print, once you enter, your first target is overnight low or previous low a day, whichever one comes first. Of course, it was overnight low. It made it to that, went straight through it. Again, you could have scalped for profit here if you wanted to, and then you could have scalped for profit there. It just all depends on how you want to trade, but it just shows how these markers and broadening formations really do come into play and allow you precision trading. So let's go back out to the 4-hour, and sorry, that kind of drew the video out a little bit longer, but I think it was important to go over. So let's remove the opening print, and let's move the 4-hour trigger to the downside to the low of the second 4-hour candle. Oops, zoom this in. All right, so the 4-hour trigger is the low of the second 4-hour candle of the day. The 4-hour trigger to the upside is the high of the second 4-hour candle of the day on Friday. We'll activate our previous high a day, move it to Friday's high, previous low a day. All right, so very simple, very easy, and we've got very precise entries and exits already without doing too much. Overnight high, overnight low, we'll move those in the morning before or right when the bell opens, because price is going to move a lot more over the weekend and Monday morning, so we won't move those right now. Let's go ahead and mark our notes now at this point, though. On the 4-hour, we would have a two down, 1, 2 down continuation pattern. The one good thing about a 1 is it will give you a precise entry and exit for whichever direction you're going to go in after the 1. Not a lot of magnitude here, though. So our entry is 27.19. All right, 27.19 is our trigger, and this is a 2, 1, 2 down. All right, so our trigger is the low of the second 4-hour candle, and the target is the low of this candle, and that is 27.07. So again, not a lot of magnitude. We'll go ahead and look at one thing we do want to do. Let's go ahead and look at where our extended targets would be. Don't have a whole lot on this one. Let's bring out our fibs, right? So we've got this 2604. That is last month's 50%. Let's remove this week. So you can see this dashed green line, that is 50% of last month. So 2604, this 2584 is the high of last quarter. Again, if you're not familiar with the color coding system and what these lines are, check out our precision trading video in our bonus content. But those are some pretty good targets, as well as the low of this candle. That would play out of a greater combination strat. I don't like to get into too many combination strats, because then you kind of get real stretched targets, but that does coincide with these areas as well. So we'll use the 2604 and 2584 and 2584 as our extended targets. We have this lower low here of 2545. We broke through that, so that can act as a magnet as well. And we just also like to know where that's at, because that tells us where the broadening formation on the 4-hour perspective would be widening, right? That's good for the downside triggers and targets. I don't want to get too many extended, because the 4-hour triggers and targets roll into the day very easy. So no need in really getting an extended targets on the 4-hour, because they'll just be targets on the day. We do want to record that this is going to be a 2 up, 1, 2 up. 2 down. We need to make sure we mark that, because it can make a difference that this is a continuation, 2 down, 1, 2 down. This is a reversal, 2 down, 1, 2 up, right? And that lets us know that we would rather, from a trading perspective, have the flip the reversal, because that's going to give us bigger magnitude, and that'll show us here. That'll be shown here in a second. So we have the, let's go back to our scalp chart. Oops. So we have our 4-hour trigger to the upside here at 27.57. So 27.57 is where that triggers. And we have a magnitude that's much higher here. You see this trigger and magnitude, we're very close here. This trigger and magnitude are much wider, which is why we want the flip. The magnitude is the previous high day, which is 28.71. So we have a magnitude here with 28.71, right? And we can have an extended target of the high of this candle, because that would make a 2 down combo 2 up, because this 1 and this 2 up candle that you would have if it breaks above here would combine just to make a greater 2 up compared to this candle. So that magnitude would be the high of this candle, which is 29.66, which was the high of 2 days ago. And then we have our extended target of that 30.55. Remember that 61.8 fib of the 2020 low to 2021 high, that 30.55, and then another extended target of 31.96. Okay. Now our expected move, the top of the market maker's expected move is 29.94. So you want to keep that in mind when we're talking about the 30.55 targets and the extended targets. You know, will we really reach those? Who knows? But for now, those are the extended targets. We do want to go ahead and activate this 4-hour broadening formation and correct it, because this is the new latest 4-hour broadening where we've had a high, a low, and then a higher high. So boom. We don't have a new 4-hour broadening to the downside yet, because this has not been resolved. We haven't had either a 2 up or a continued 2 down. If we continue 2 down, the broadening formation obviously would steepen. If we get the 2 up, we do need to clear the top of this, but to make it to really lock in this as a low. But if we did, that would, we would have let's get the right line. We would have a 4-hour broadening like this. So pretty wide again. So we can expect it this week, from my perspective, a little bit more volatility, right? Just kind of like these last few days we're here, up, down, right? Just continuing to widen this broadening formation. We'll leave the 1-hour broadening formation on there as well, just as kind of like indicators as to where we might see a little bit of corrective activity, not from a day perspective or even a 4-hour perspective, but just intraday. That way we know that that's a point where we could either add to our contracts or subtract from the position that we have. But let's go ahead and get into the day triggers and targets. So from the day perspective, let's go ahead and get our more clear chart out here. So from the day perspective, we would have the 3, 2 down, 2 up, which again, I was kind of asking for the 2 down on Friday to kind of set this up. But again, it started a little higher than I would have wanted it to. I would have wanted it to start down here, give us more magnitude. But even if we get the 3, 2 down, 2 up, I'm not going to be mad, because I'll still take the entry and exit, and it would hopefully confirm the uptrend. So let's see what that would bring us. Well, first let's look to the downside. We would have a 2 down, 2 down continuation. So that would trigger at the low of Friday, which is 27.07, which again was the magnitude here on the 4-hour. That's why I say the 4 hours just roll into the day. So no real sense in getting too many extended triggers and targets on the 4-hour. As I say that, I have 3 there. So that would be the 2 down, 2 down continuation. So we'll just put 2 down, 2 down. And because it's not a reversal, it doesn't have a magnitude. It has a clear entry, but it doesn't have a clear exit, right? It's not part of a STRAT reversal. So the entry is there, but I would call the clear exit the low of this candle, 25.68. 25.68. And we can take these off of here. Oops. Oh yeah, I think that was the magnitude. Yeah, so there was a greater, if we wanted to look at a combo 2 up, combo 2 down, that would be the magnitude. I think that's why we put that on there on Friday. Again, I don't like to do a lot of combo strats, but we were just kind of looking for stretches on Friday. Check out that video if you haven't seen it. Let's look at the next extended target would be the low of this candle, 25.45. And you might say that, that's pretty close. It's only 20 cents, but again, we can look at $2 move in SOXL was basically a 7% move. So you don't need a lot of movement in, a dollar amount to get a high move in a percentage amount. So, and because of the distance, we don't want to get too stretched. Now, again, we could throw in this combo situation because of this one here. This could be a 1 combo 2 up, combo 2 down. The magnitude being this candle. So instead of, we used the bottom of this candle and the bottom of this candle as extended targets. Instead of using the bottom of this candle, we can use the combo strat to use the bottom of this candle, which is just the top of the gap. So that's 24.53. So I'd say that's a pretty extended target from a day perspective. I would not expect it to reach that in a day, but you never know what can happen, and so we're just going to leave that out there anyway. Now the lower low from the day perspective is here at 22.95, and we've got that there. So from the day perspective, again, to the upside, we would have a 3, 2 down, 2 up if we're going to the upside. The trigger being the high of Friday, which is 28.71. All right, which was the magnitude of the 4-hour flip. So again, the 4-hour plays into the day, and the magnitude, because this is a reversal, would be the high of the 3, which is 29.66. Wait, did I get that right? Yeah, 29.66. Which would be an extended target, one of the extended targets for the 4-hour, which is why I said you don't need to get too many extended targets on the 4-hour. They just play into the day. So then our extended targets, once we reach magnitude, would be the 30.55, 31.47, and 31.96. We can leave those out there from our previous notes. They're levels of notes, so there's no reason of changing them, right? The higher high on the day is this 29.66 now. So won't take quite as much to extend the broadening formation. And then let's go ahead and set up our weekly broadening formations. Not broadening formations, our week triggers and targets, right? Because we want to know if something triggers on Monday, can we enter and stay in it through the week, or at least just have a swing for the week. So we're looking at, again, possible 1, 2 up, 2 down situation, which would give us a magnitude of the low of the candle to the left of the 1, which is at 22.57. So again, we would trigger here at the low of this 2, which is 25.45. So to the downside, 25.45. Oops, and this is a 1, 2 up, 2 down. And the magnitude, again, is the low of the candle to the left of the 1. So the low is 22.57 on this candle, which we've already got out here from the previous week. And we've got our extended targets as well. We'll go ahead and leave those out there because, again, they were levels of note to begin with, so there's no reason to change them. Let's look to the upside. We would have a 2 up, 2 up continuation. So there would be no magnitude. Oops. Whoa. Right, we would just have the trigger, which would be a very defined trigger, right, which is 29.66. And our extended targets would be this 30.55, 32.64, and that 32.64 is a higher high on the week right here, and the next extended target would be the next higher high, which is 36.15. So that would be way above the market maker's expected move, right? But right, market maker's expected move is here, so even getting to this first higher high on the week would be above the market maker's expected move. But it could happen, right? It could happen. We've had big weeks before in the past, and you never know what can happen. So the key is being ready for both sides, and that's what we are with these notes, right? We are ready for whether price action takes us to the upside or to the downside, right? We know that what our expected move is for the week by the market makers. We know where our month, quarter, and year flip to different levels. Oops. Right. Oops. Gotta make sure our notes are correct, right, to start the week. So we know where the month flips red, we know where the quarter flips red, we know where the year flips green, we'll know where the week flips once it opens. We know where our gaps are above, we know where our gaps are below, acting as magnets either to the upside or downside. And we know once price action triggers certain levels where we want to enter and where we want to exit, right? So that's the key, right? No guessing about this. You'll know before you even enter the trade. You know, you look at your contract, you look at your delta, your theta, you look at the different, the premium, and you can calculate your risk to reward, right? You can calculate how much you are willing to give up in a pullback for the chance to make that much more in reward in the direction that your contract would be going in. And again, SOXL, very low cost of entry from an options perspective. The premium is quite low. Especially for the delta, the high amount of delta that you're getting, the low theta that you're getting, especially when you're very close to the money, if not in the money, and the underlying beta of the stock of the ETF. Depending on where you're doing your research, it's the beta of SOXL is 4 to 5.5. So you're gonna get big moves basically every day, right? That just high beta means there's high volatility in the stock. So it may not be something you want to own necessarily unless you're buying at the lows. Like if you bought at times where we bought in like April and where it's sub $10 price, then it could be an investment for you on a short-term perspective, not something that you would necessarily want to hold on for years and years and years because of that volatility. But it can provide you from a shares perspective because of how cheap they are. It's a $20, $30 ETF right now. If you wait for pullbacks, you can get it sub $10. It's good for making very good returns for low cost of entry, right? So if you use the methodology in the charting that is repeatable, that is proven, then you can use those methods to make money on a daily basis if you want to use scalping and day trading, or if you just want to enter swings. You have very precise entries and exits for even mid and long-term swing trades based off of the different time frames and the different strats on those time frames, right? We talked about the month, the quarter, and the year, and right. So if we go to the month, we know that we are in a setting a higher low. We've just put in an engulfing 3. From the quarter perspective, if you wanted to wait for a swing to swing over multiple months, you could have waited till price action got above this high, the 2584. Bought January 26, January 27 calls, and just entered those and kind of kicked back and not have to worry about the day to day and just wait for it to reach its magnitude and either exit all of your position or sell 50% or 80% of them, whatever you choose to do. You can set your stop just below the trigger. So if it does pull back, you can sell and have minimal loss, if not break even, and just continue to watch for the next time it breaks and triggers to the upside again, that you can go ahead and re-enter, right? But look at the magnitude that you would get. The high here is 2584 and the high here is 3615. So that's $10 basically. And you can see how $2 is a 7% move. So 5 times that, that's $10. 5 times that, that's a 30% move in the underlying stock, right? So low cost of entry for a high reward, and when using with a proven and repeatable strategy that just can bolster your confidence in being able to make that profit without worrying. So I hope everybody enjoyed this video today. If you did, give it a thumbs up if you made it this far. Make sure you like and subscribe. Leave me a comment what you think about the breakdown. If you're seeing something else on the charts, let me know. I don't want to get blindsided myself, so I'd love to know if somebody else is seeing something else on the charts, and I'd love to discuss it.